My goal is to make it so simple that you believe you can manage your own money, whereas their goal is to make it so complicated that you believe you can't manage your own money. So we have two different agendas. And I'm not
Hmm.
saying there's not a place for financial planners. Again, I don't know them all. I'm just talking about my experience with what I went through trying to become one, and also them telling me they don't talk to people like me who don't have a
Hmm.
$250,000 at the time, or who doesn't have a network of people who have at least $250,000.
Your relationship with money matters. I'm Michelle Perkins, and this is the Money and You podcast, where I will be breaking down your relationship with money, offering tough love money tips, and a money dating plan that will focus on lifting the barriers to success to help pave the way for better money practices and increased wealth. It's time to take control to live a limit-free life. It starts today. Hello, and welcome to the Money and You Show. I'm Michelle Perkins, your host, and super excited about today's show. We're going to talk about investing in the stock market. We're going to talk about trading and options trading and stock trading. And it's going to be a really great show because I have a really great guest, and that is going to make it very interesting for you to, you're going to learn a lot from my guest, Jason Brown, today. I can tell you a little about Jason. Jason Brown is a finance graduate from Wayne State University with over a decade of experience in stocks and options trading. At the young age of 23, Jason started trading with a $10,000 student loan and grew it into a six-figure trading account. His passion for teaching others about stock market investing led him to create his own online education company, Power Trades University, and has recently launched his 5-year millionaire program, which outlines a trading plan for members to build $1 million account in just 5 years. Jason is an active YouTuber with over 80,000 subscribers, and his videos have reached over 1 million views. He's also the host of the Money Markets and Mindset podcast. I love that. Jason believes that anyone can profit from the stock market if they know what to look for and how to spot low risk but high reward times to buy and sell, combined with the right option strategies to supercharge returns and minimize risk. Jason, welcome.
Michelle, thanks for having me. I'm
Yeah,
excited to be here.
thank you for being here. I'm super excited about this show because we really haven't gotten into this very much, and I know this topic. I really want people to stick around because I know for some people they're going to be super interested and like, let's go, let's ditch the 9 to 5 with this. And for other people, they're going to be like, this is out of my wheelhouse. You know, this is something that is either, you know, for savvier people or for younger people. I don't know. So I really want to dive in and I want to talk about how you got into it. I want to talk about a lot of things. So that's the first place I want to start because obviously you made a dedicated effort to make this work for you, and you've done it. And then I'm going to jump to something else, which is a little closer to your relationship with money. So let's just start with how you got into this.
Yeah, well, first, thanks for having me. And I think it's for everyone. So everyone listening to this will be able to take something away from it. So a little bit about my background and how I got started in the stock market. I grew up, born and raised in Detroit, Michigan, single parent household, and we grew up pretty poor. And when I say poor, like we slept in sleeping bags. And I remember when I went to my best friend's house, and I was like, "Wow, you have a bed?" And he was like, "Of course I have a bed." And I was like, "Well, I thought you get a bed when you become a grown up." Because I thought, then
Wow.
you were important. You need a good night's sleep. That was my rationale because we didn't have beds growing up. And so from a young age, I always just noticed that there was like a financial disparity gap between me and other people, or our family and other people. And my mother, God rest her soul, she, raised us with love, and we always felt safe and had food, etc. But we didn't really learn a lot about money or wealth. And so as I started to, learn about money, you would always hear about the stock market. That's where people created their wealth. That's where they got wealth. They made their money. And so when I was 18, you would hear stuff like, if you just put $2,000 away in the stock market, you would have, and waited 20 years, 30 years, came back, you'd have been a millionaire. So I was like, why don't everybody do that? Seems like a guaranteed way to become a millionaire. And so 18, where I'm from, if you graduate from high school, that's a big deal because people would get, they were selling drugs, you'd get locked up, you might get pregnant if you're a girl and drop out of school, you might be in the gang and not make it. So there was a lot of reasons we celebrated high school. Like, forget college. If you just got out of high school, you did well. And so I took my high school graduation money from like my big open house celebration, which was like $2,000. And I went to the bank, opened me an investment account, did what I thought I was supposed to do. Girl asked me like two questions, like, why do you want to invest? I'm like, to be rich. Like, why else do people do this? And she was like, so you want aggressive funds? I'm like, yeah, I'm 18. I want aggressive funds. I need aggressive growth. And so I gave her my $2,000. I come back 2 years later. I'm about 20 years old. I'm like, okay, how's my money doing? Check the account. $2,000 is now down to $700. So they lost $1,300 of my money. I'm like depressed. I'm upset. I'm like, what happened? Because, that's majority of my money. And last time I checked, I'm not about to graduate high school again. So I don't know how I'm going to get another $2,000. And so, she basically just like, I don't know what to tell you. And so I was like, okay, give me my $700, the money I had left. I was like, I could have lost my own money. I'm going to do this myself. And so I spent $200 on like some Jordans or something to make me feel better. I have $500 left. I'm working for Sprint PCS. I'm making $8 an hour selling cell phones inside of Best Buy. And I make like $64 on a Saturday, $50 take home if you take taxes out. So I was like, man, if I could just make $50 with this $500, then I wouldn't have to work on my Saturdays. And lo and behold, our stock at Sprint PCS at the time was $5 a share. So I had $500. I'm like, 500 shares. I just needed to move 50 cents. That's not a lot of money. That's reasonable to ask. Can it move 50 cents maybe a week? And I can make $50 a week and I wouldn't have to work Saturdays. So I bought the stock at $5. It immediately falls down to $4. I'm like, oh my God, this doesn't work. Maybe I'm not as smart as I thought I was. I'm like, like just second guessing myself. But then I hear people say, oh, you got to be in it for the long term. You got to wait. You got to, ride the ups and downs. So I'm patient. Stock makes its way back up to $5. I'm like, okay, let's go to $5.50. We're about to make our $50. Stock falls back down to $4 again. So now I'm like, stock market's rigged. They know I needed to go to $5.50 and won't let it go. That's why they asked for my social security number. They know exactly what price I bought and they won't let it get above that. At least that's what I'm thinking. The market's rigged. Stock goes back up to $5. And I say to myself, I've seen this before. And so I get out at $5 and break even. Stock falls down to $4. I get in. Stock goes back up to $5. I actually make my first $100. And so I didn't know that was called a channel in stock pattern, that if you drew it out on the chart, it looked like a snake in the grass, right? Stock was going from 5 to 4, 4 to 5, 5 to 4, 4 to 5. And so I started thinking, studying, and like, what other patterns out there exist that I don't know about? And I get really good at identifying these patterns. And so I got good at flipping my $500. And I said, okay, so if I had $1,000, I would have made this much. If I had 5,000, I'm like, I would have been rich. I'm like, if I had 10,000, I'm like, whoa, I would have made, almost $2,000. So I'm like, where am I going to get $10,000 from? I had an academic scholarship to Wayne State University, Mike Ilitch School of Business here in Detroit, Michigan. And I knew that I saw people getting student loan refunds and they were partying with it. They were shopping, doing all kind of stuff. And so I researched. I was like, I wonder if I apply for student aid, will they double pay the account and I get the refund? And sure enough, I went to the financial aid office. They're like, yep, you could use that money for room and board or, living expenses, but I lived at home. And so I had a game plan. I was going to take that $10,000 and put it in the stock market and just do what I was already doing with the $500. And so I did. And at 21, I grew like a $10,000 student loan to like over $113,000 as a 21-year-old college student. So like that was like my foray or first like entry into the stock market.
Wow. That is a great story. And I loved the fact that I don't know where it came from. I mean, obviously, you wanted to make money, but just the attention that you were paying to it all, because, that's kind of an overriding theme that I talk with people about, is they just don't pay enough attention to money. So it's like a relationship where you don't pay attention to somebody, it's not going to develop very well, right? So, but
or you won't get to know them that well.
That's 100%. That's exactly right. And so, yeah, you were focused on it and you had an intention, and you were also willing to, instead of just walking away from it kind of, in frustration, you analyzed it and you looked at it and you thought, it's that little bit of that stick-to-itiveness too, where you were going to figure it out.
Yeah, I think it's important for people in life to understand that, like, if it works, at least my mindset was like, it works for other people and they breathe oxygen like I do. So it's like, I just need to figure out how to make it work. And so, I didn't give power to like, oh, that only works for special people. I'm like, no, like, what do they know that I don't know? And then how do I, make it work for me with my current circumstances, which my circumstances was starting with $500. My circumstances, I don't recommend people borrow money to invest, but that was my circumstances. I was like, how else am I going to get $10,000? And to me, the student loan was a low risk, high reward. I figured some people think, well, whoa, isn't that risky? What if you lose the money? I said, well, if I lose the 10,000, I'll just do what everybody else does. I'll pay a little bit back over time and I'll eventually pay it off. That's number one. Number two, I'm like, the interest doesn't kick in until the fourth year. So I got 4 years to figure this out. And so that was also the first time I really learned about taking a calculated risk versus like listening to people around me or being afraid of money. It's like, I knew the interest rate. I knew it didn't kick in until I graduate. I knew what the monthly payments would be. I knew I had 4 years to figure it out. And so I was like, but if I'm right, I'm rich.
Yeah.
And so if I'm wrong, I just pay back 10,000 over time. And so that was like my mindset.
That's a great mindset. And the fact that you're talking about mindset at all is just thrilling to me. I know you have a podcast around mindset, and I want to get into some nitty gritty, on this topic. But I can't help myself because I love the emotional side of money. And I did listen to your podcast about the emotions around it. And I thought it was a brilliant podcast because, with the show was about emotional reactions to trading events, but I think it translates to anything money related, whether that's getting into debt or, whatever it might be. And so I just want to talk for a few minutes about that because I thought it was really important. I do feel that the emotional side of money, that relationship with money, is the foundational piece. Like that can really screw you up. You can know what to do technically, but if you can't, like with anything in life, if you can't have some control over your emotional side, then it's going to be hard to make it work, like with anything, really. So can you speak a little to that kind of emotional analysis that you were talking about on your show? And I just love the gratitude piece and some of the other things. So maybe just a few minutes to summarize a little of that.
Yeah, it's, the reason the podcast is called a Money Markets and Mindset podcast, because like it's more than understanding the stock market, and you have to understand how money works, and you have to understand your relationship and your mindset to it. And I believe the episode you're talking about was one where like I had actually made like, I don't know, probably 20 something $1,000 in the day, but I was upset because I could have made more. And there was just this energy of like, you're mad when you get out of a trade because you could have made more. You're mad if you would have stayed in it and if it would have went the other way and you would have gave the money back. And you really just have to be grateful that your money is working hard for you instead of you working hard for it. And you have to really take control of that emotions, because people think because you start making a little bit of money, like fear and greed is going to go away, but it's always present. Even when you become, you think like, if I make six figures, like all my worries will go away. But then like when you make six figures, you get afraid of getting laid off or losing the six figures. Then you're like, if I could just make $1 million, all my, I wouldn't worry about nothing. I wouldn't. And then you make $1 million and you're like, well, the house costs $1 million now, so it's not really $1 million. And like, can I keep making $1 million? And now I pay more in taxes. And so like, there's always this push and pull between, is there enough? Fear, you're going to lose it. Fear that you can't make enough. Greed that you can make more, and should you go after making more? And it's not until you really understand that like the key is you, like you are the key. And as long as you are the asset, then you will have the ability to make money as well as lose money and get it back. And it doesn't really scare you because as long as you have your health and you're in your right mind, you can always make money. And that's like the battle that you're constantly fighting. It's just believing in yourself, and that regardless if it's COVID, high interest rates, inflation, knowing that you are the asset that can continue to produce in any market condition, in any environment.
Yeah, thank you. Yeah, I thought that was brilliant because you're right. It was like a good event. But with anything like that, you get the job and then you find out that somebody else just got it and is making a higher salary, and you go back and think, "Oh my gosh, I could have gone back and negotiated something a little better." We all do that. There's always a little bit better. And you talked about there being a range and not trying to be perfect in this, which again applies to pretty much everything, um, because there is no perfect in most things, and not in this either. So if you could just
There
speak
is
to
no
that for a minute
perfect.
too.
Yeah, and so the range I talk about is like people think they're gonna. I mean, if you really think about what you're saying when you say like you want to get out. Most people when they're investing in the stock, whether they're investing or trading, and investing is more like long term fundamental research. Trading is you're taking advantage of patterns. So you see that a stock is going up, you believe it's going to go to a certain point before it turns around, and to think that you can get in at the absolute bottom, the absolute lowest, best price, like the day I press buy is the day it stops and turns and goes up. It's like saying, like, the exact day, minute, hour down to the second the stock market is going to turn around. And the same thing on the upside is I only want to get out the moment it's done going up. I want to get the maximum amount of profit. And it's like, that means the exact day, minute, hour, and second that it's going to stop going up. And as soon as you press the sell button, that's it. The stock has to turn around. And that's a game of being perfect, which the stock market is not about perfect. The stock market is about catching that range in between, knowing like I may not get the absolute best price, but I'm getting in right when I think it's going to start going up or continue going up. And I'm not getting out at the absolute highest price, but I'm getting out at a price that's acceptable to me, which is more than what I paid for it. And so we talk about in that range, it's kind of a 25% on top and bottom. It's like 25% you won't get the best price. So just expect you're going to get paid 25% more on the bottom end. And as it's running up to 100% of the move, you're not going to get out at the exact top. You want to get out about 75% of the way up there. And so that leaves you about 50 to 75% of the profit in the middle. And you can become rich off that middle. And that's
Hmm.
the key. Because if you're trying to be perfect, you're just going to be frustrated in this industry.
Yeah. Yeah, that's excellent too. That's a great mindset tip. And it's again, I equate all of these things to relationships because I do think your money is a relationship that you have and you relate to it. And so and that's, you can't expect that to be perfect. You can't expect money to be perfect. You can expect your partner or your kid or anybody else to be perfect. So I think that's a great way to think about it. And so much of it is how you're thinking about all of this. I mean, it's really, like you said, it's all happening in your head, whether that's how you feel about it at the end of the day or what you're willing to do. So let's talk about the doing. You went from, starting this on a, kind of a small scale. And how did you, what were the steps that allowed you to do this in the way that you do it now?
Yeah. So a very important part of the story that people must understand is like, you hear like, oh, okay, so he took a $10,000 student loan and turned it to six figures, and like now he's a millionaire. It's like not quite. Well, I mean, yes, but there's a whole lot in the middle that we got to talk about here. And so, what most people don't know that I always like to share this portion of the story is that I dropped out of school and I'm full time trading and investing in the stock market, and I'm doing that full time for 3 years, and I run the account up to about 300,000. So I mean, I'm a young guy at this point. I'm like 25 years old, making the most money I've ever made in my life, not working, not going to school, without a degree. And so year three, I'm like, okay, I'm gonna buy a condo downtown Royal Oak, Michigan. I was already living the ultimate bachelor life. I had a Lexus GS 300. My cousin, who was also trading, had a Cadillac Escalade. Moved out to the suburbs. Had all the nice things, the watches, the cars, you name it. And so year three, I'm like, I'm buying a condo cash downtown Royal Oak, Michigan, $500,000 at the most. It's one of the most prestigious high rise condos. At least it was at that time. I think it still is. And so I risk a quarter million trying to make 500,000, and then I'll lose it all, pretty much lost the all, blew up my trading account. And so pretty much I'm broke. And I'm like, oh my goodness, what am I going to do? And so I had to move back home to the place that I hate with bars on the window where people stealing your cars, the drug infested neighborhood. And if you've ever tasted success and have to go back, like it hurts.
Yeah.
Cause you're like, you thought like, I'm so far removed from that. I'm never going back. Like, you love your new life and have to give it up and go back to your old life. That was painful. But again, I think it's all about mindset. So you said, what are the steps? So for me, one of the things that I used to be in network marketing. We read all these books and different things like this. And I would listen to like Jim Rohn, the motivational speaker. And, there was two things that, really helped me. That they talked about like the hero theory. And it's like, when you don't have the energy or power yourself, think about what your hero would do. For me, my hero in the stock market field was Warren Buffett. And so I'm like, okay, has Warren Buffett ever lost money before? And I'm like, if he quits, he never becomes Warren Buffett, which we all know he's a billionaire, runs the biggest, investment firm, greatest investor of all time, et cetera. And so I'm like, if I quit, I never become Jason Brown, which whoever that means I'm meant to be in this world with respect to the stock market. And so one of the things Jim Rome talked about was he was like, take a picture of where you're at. And he's like, you won't be here for long. Remember these times, use it as motivation. And so I recorded myself moving back home, selling all my stuff. And then I said, okay, I got a crazy idea. People have lost money before. And it's like, what if, like the people you respect aren't the people who just like, I started, I never had any trials and tribulation, I went straight to the top. So I said, I'm going to document myself making the money back. And I started recording these YouTube videos of myself making the money back. I was like, I know the stock market works. It worked for me before. I just got to figure out what I did wrong. Why did I risk so much? Why did I put so much on one trade? Like, I just had to figure out what knocked me down and never do it again. What lessons was it trying to teach me? And, I was like, well, I better learn this lesson before I become a millionaire. At least I learned it as 100,000 there. I used to call myself 1,000 there. So I was like, at least I better learn it now so I don't learn it with millions or several millions. So I video recorded myself making the money back. And I started building all these principles, like you never go broke taking a profit. That's one of our t-shirts that we normally wear and slogans, because when I lost that $250,000, I was up 100,000, but it wasn't enough. I was like, I'm not getting out till I make 500,000. And that goes with looking at that chart and realizing I had made 75%, almost to 100% of the move. That move wasn't going to give me $500,000, but I wasn't happy with the 50 to 75% move that it did give me. So you never go broke taking a profit was one of the things I learned from that. I learned a lot about fear and greed. I was greedy, wanted, 400,000 more. I wasn't happy with the 100,000 I was up. And so those are some of the, things I learned along the way, or some of the steps that I took along the way. I analyzed what went wrong, what went right. I started to get my fear and greed under control. I started to tap into my hero's brain and say, what would they do? And I just built the money back up, knowing that, I didn't have to wonder if it worked. I knew it worked. I had already tasted success. I was just like, okay, how do I rebuild it back and build long-standing success? And so I also want to just share, like, tactically, I went and got a job. I know sometimes people are like, I want to do this full time and different things like this. When I was doing it full time and I lost all that money, I had nothing to fall back on. And so I went and got a job selling cell phones at Verizon Wireless. And one of the things I did was I built my lifestyle around the hourly, and then my commission checks, I was using that to get back into the stock market. So that's how I started to raise money to get back into the stock market. They also had tuition reimbursement. And so I was like, now I know what I want to go back to school for. I went back to get my finance degree. So I eventually graduated from Wayne State. People would be like, well, why would you go back to school if you're making all this money in the stock market? It's because at that point I was cocky and I'm like, I don't need education. I don't need school. I don't need all this stuff. And when I lost it all, I got like knocked through the floor. I got knocked down into the basement. So now I live by a concept of like raising your floor. And so I'm like, if I ever had to get a job, at least I would have my degree and I could start out making six figures. I won't have to go back down to 40, 50,000 selling cell phones, hoping I can make commission. So that's why I ended up getting my degree. And then as I was putting that money back in the market, grew my account back up, as I'm recording this stuff, people start asking me like, how are you finding these trades? How are you determining when to buy and when to sell? And so I was like, man, I know how to get hundreds of $1,000s in the account. That's nothing. I'm like, how do you get $1 million in the account? And I started wondering if people, because I had started taking some courses, like maybe, just make sure I knew what I thought I knew. And I got
Right.
as good as the teachers. And I was like, well, how come they don't explain it like this? And so I started explaining it so regular, everyday people could understand. And that's when I was like, I wonder if people would pay me for my stock tips and to teach them how the stock market works. And that was my genius idea. It's like, that's how I'm going to get millions of dollars into the account. And so as I was working and putting my commission checks in the stock market, as well as building my business on the side, I was just putting all that money back into the stock market and just, again, trying to build my floor, making sure I had multiple streams of income, paying down debt, making sure if I ever walked away from corporate America again, that it would be for good this time and that I wouldn't get knocked through the floor if something went wrong with investing in the stock market.
Wow, that is really great. Great advice. Great, and I love the way you just walked people through your own journey to show them, how to come back. Yeah, pretty impressive. And obviously you were doing that, to help yourself along with other people, and it's a great way to teach people, to show them exactly what you're doing to move yourself through there. And
Yeah, because I'm like, I can't be the only one who's ever lost money or sitting at home in their mom's house feeling like down and out. And so I
yeah.
said, let's document the process. I mean, it's almost like you're just watching your own life through a movie. You don't have to have some big movie deal. You're like, I'm just going to document my own life and how I pull myself up out of this. So
Right.
it was a cool experience, which is why I love doing podcasts and shooting videos now, because I feel like we're just documenting in history what we're doing
Yeah.
10, 20 years from now. When people look back and say, what was that guy thinking? What was his mindset? You'd be like, whoa, this was him in 2023, you know?
Yeah. Yeah. No, that is so great. And it's also just a great, you know, I don't know whose fault it is, but it's the way the world, things are communicated in the world today. It does leave out the aspect that life is life. Things are going to happen, all kinds of things that are going to slow you down, stop you, reverse you, whatever. And it's going to happen to everybody at some point, in some way. And so this idea, teaching people and knowing for yourself how to come back from that, because it does kind of beg the question, like at the time you bought the condo and everything, what was your mindset then? And I know plenty of other people too, some personally who, whether it was in real estate or whatever, times were good and things were going well, and they just took it to a place, where when it went bad, it was, hard to recover from, and it was a start over. So, but where do you think your mindset was then? Were you just thinking it would go on forever like this?
Yeah, I think I was untouchable. I thought I was smarter than everybody. I thought, I'm just gonna be a gazillionaire and just, throwing money out the window. And so I'm very actually thankful that I lost the money
Hmm.
back then because it humbled me. Like
Yeah.
I would not be a likable guy if things kept going on that upward trajectory. Like I mean, I look back now, I'm like that guy was not a good guy. Like that was not somebody you'd want dating your daughter. That was not a guy you'd want to invite over for dinner. That guy thought he knew everything. He was cocky. He was pompous. And I guess rightfully so, being that young, making a ton of money and thinking you could just print unlimited money. But I'm actually so glad that I got knocked down because it humbled me. And that's not who I really was. I think that's what early success turned me into.
Hmm.
But if, you knew my upbringing, that's not who I really am. And I think the humbleness is what, I truly am. And it keeps you humble because you like even now you never forget that it could be taken away from you at a
Hmm.
moment's instant. And I think there's healthy skepticism or there's healthy like paranoia
Hmm.
where
Yeah.
you're like, let's just be grateful, let's thank God, let's not let our guard down too much and think we don't have to do the research when it comes to these stocks. Let's not let our guard down and over leverage ourselves with cars, watches, and toys, thinking we'll always be able to pay for it. When the pandemic hit, I was financially okay. When
Mm-hmm.
inflation hit, our house is paid off. We have no debt. Those are things that I learned, which was like prepare for downtime, right? Humble yourself, make sure you can get through an economic downturn or a storm. And so just really, I think I came out a way more humbled and prepared person versus my mindset back then was like, I'm smart. I'll be able to make more money. We'll figure it out. I'll press a button and I'll print some more money and I'll pay for
Mm-hmm.
this. That was my mindset back then.
Yeah, that's great. I mean, it's just great to see how things evolve too, because, mindset, the beauty of mindset is that you can change it. Like, it's not a fixed thing. And so, and you have control over it too. It's not up to somebody else to change your mindset. So there's some really beautiful things about, if your belief is that mindset is the key to a lot of things, it's within your control. So you just have to be super aware, which sometimes it takes these kind of events for people to find the awareness. But so let's get a little more into the kind of trading that you do and you teach. And, is it actually for anybody? Who's it for?
Yeah. So I would say the strategies are for anybody, and how you implement them depends on each person's unique situation. And so there's not one single person that the stock market isn't for, because we're already all participating in the stock market. We're all participating as a consumer if we're, buying iPhones, but we don't own the stock. We're the ones driving the price up. If we're scrolling Facebook, looking at the ads, we're the one giving them a marketplace for people to run ads on to drive the price up. So we're either participating from a consumer standpoint or an investor standpoint. And so the type of trading that I do, and again, let me be clear of the difference between trading and investing.
Yeah.
So trading is we're taking advantage of a pattern that we see in the moment in time, meaning like I'm not buying this and gonna, I always use Ford stock as an example. If you bought Ford stock 20 years ago, 20 years later, it's still the same price, if not slightly lower. That's not what we're about. We're not about buying and hold. We're about finding what's moving and then taking advantage of that movement for the period that it's moving, and then moving on to the next stock, the next sector, the next industry that's moving. And so that strategy can be used whether you're a long-term investor or a short-term trader, because you can look at charts and you can determine if you're in the best investments or not. A lot of people just get their 401k, they go to their financial advisor and just say, you tell me what to do. But they never look at a historical chart and say, show me the last 5 years performance, and then say, okay, that one's moving faster than this one. Do I believe that one's going to continue moving faster? This one I'm in made me 2%. That one over there made 10% a year. And so how come I'm not in that 10% a year one? We just do that every day with individual stocks, or we do that with the S&P 500 or sectors. And we say, look at this chart, look at the momentum, look at the technical analysis is what we call it. And we believe the stock is going up or down. And then we take advantage of that short term. And so the way that we typically capitalize on that is by using options. And so we use calls or put options to control higher price stocks, to be able to control more amount of stocks. Control is different from actually owning it. You have the right to own it, but we don't really want to own it. We just want to control it and take advantage of the price appreciation. Or if the market's selling off or falling, we typically use put options to make money from stocks falling, which for some people that's completely foreign to think that you can make money from stocks going down. But a lot of people become wealthy not from stocks going up, but actually from it going down, because when they drop hard, they drop fast. And if you know how to make money from it, you can actually build your wealth pretty quickly.
And is that some of what you teach in your courses?
Yes, that's absolutely what we teach inside our courses. But I think for people who don't have a course or something like that, I want to give you an example, because I
Yeah.
never like to kind of leave it as a like, you'll learn if you pay me. But here's how it works. So let me give an example that everyone in your audience can relate to. If they've ever bought a house, for example, let's say you go look at this house, it's $200,000. You're like, great, I like it, I want to buy it. Well, they ask you for an earnest money deposit of about $2,000. So you put the $2,000 down. You usually have about 30 days to get an inspection, get an appraisal, and see if you want the house. So you are controlling the house for 30 days for $2,000. Now you get an inspection and appraisal, comes back, and they're like, this house is worth $250,000. You have some equity in it. This neighborhood's going up, etc. Now someone else comes like, oh man, I really want this house, but it sounds like you have it under contract. You can say, hey, I do, but if you really want the house, it appraised at $250,000. I have this contract where you can buy it for $200,000. Just give me $50,000 for the piece of paper, and you'll have a house for $250,000. $200,000 to them, $50,000 to me, total $250 to you. You have a house that appraised at $250,000. They say, perfect. Kids want it. I want to move in that neighborhood, whatever the case may be. So when they give you that $50,000, you got to think about it. You controlled a $200,000 asset for $2,000, a fraction of the cost. Because the price went up in 30 days because of the appraisal, because people are moving in that neighborhood, you turned that $2,000 contract into $50,000. And so that's what option trading is. You can control the Googles, the Teslas, the NVIDIAs, higher price stocks for 30 days, 60 days, 90 days, up to a year. Those are called leaps, long-term equity asset positions. You can control them for a fraction of the cost. And as they increase in value, you can sell that contract and just take your money out of it without ever having to own those stocks. And so we do the same thing, like I said, in real estate, they call it wholesaling. If you had that house under contract but didn't move into it, but it increased in value and you sold it to somebody else. And so we're all participating in some way or another. You just didn't know that you could probably do that in the stock market. And one other example I'll give you about put options. So put options mean you can protect your account or you can profit from stocks falling. And this is another place where everybody's participating in, but they just don't realize it. So think about your insurance that you pay for on your car. Maybe you have $100,000 Mercedes and you pay $500 a month in insurance. You smack it into the wall, God forbid, you total the car, you walk away okay. You can call your insurance company and put $100,000 car to them, even though it's worth zero, because you smashed into the wall. But you can still force them to buy that car at $100,000, even though it's not worth it anymore. That's called a put option. So they're selling you a put option every single month, and you're buying it, and you're saying, hey, if I crash, I can put this to you and make it whole. They're saying we're willing to take your $500 every month because we don't believe you're going to get in an accident, because they looked at your driving record, are you married, your credit score, and all that stuff, right? Same thing with the stock market. We look at the owner of the company, the industry, the employees, the product, and you can be like the insurance company and sell those put options and get paid every single month. Or if you believe COVID-19 is happening, inflation or something that's going to take your stocks down, you can be a buyer of a put option and protect your $100,000 portfolio in case inflation, a war, or something like COVID comes and crashes your bank account or your trading account. You can have it protected. And so most people just have never been explained to like that. So they didn't know that the same stuff that they're doing in everyday regular life, they're buying calls and put options every single day. Just they don't call it that.
Wow, that's a great explanation. Yeah, I love that you can put these things in terms that people can understand. That's something that you brought up, in relation to your college experience. And I think that's one of the things that's most needed in the finance world. People make it very hard to understand, and you're making it easy for people to understand, which is what allows more people to engage in it, which is so important. It really shouldn't be something for a certain segment of the population. It should be, it's out there for everybody. It's just you can't take advantage of it if you don't understand it well enough. So
That's the key. That's the key. And people have to understand why. And I think this is why I got upset at the industry and wanted to do YouTube videos, podcasts, stuff like that. Because I would be like, once I understood it, I was like, why don't they just say that? Like, why do they make it so complicated? But what I found is I actually went to become a financial planner. And this is no disrespect to all financial planners. I don't think everyone's like this, but I went to a well-known company. I won't say their name. And I was like, yeah, I want to be a financial planner, a financial manager. And basically, they had me write out on a piece of paper everybody I knew in my family and was like, now, how many of those people have $250,000? I'm like, I don't know. And if they do, like, they ain't telling me about it. And so they kind of was like, well, we don't think you'd survive in this game because the game is about getting them to bring those accounts over to you. And if you don't have the network, then you won't be successful. And I was like, well, then who talks to people like us? And they was kind of like, I don't know, not us. And I thought,
Yeah.
okay, wow, that's interesting. And then I started to figure out, well, then what do you say to bring them over and stuff like that? And like the whole game was about explaining things in complicated terms that made people feel stupid so that they can say, oh, you went to school for this. I trust you. Okay, I'll turn my account over to you. So then I realized like there was a whole plot behind why they explain it and make it so complicated. It's so that you can turn your money over to them. And I was like, oh, now I get it. Like that's like a sales tactic.
Mm-hmm.
And so I'm like the opposite because I don't manage anybody's money because I'm not licensed to manage anybody's money. I don't want to manage anyone's money. My goal is the opposite. My goal is to make it so simple that you believe you can manage your own money. Whereas their goal is to make it so complicated that you believe you can't manage your own money. So we have two different agendas. And I'm not saying there's not a place for financial planners. Again, I don't know them all. I'm just talking about my experience with what I went through trying to become one, and also them telling me they don't talk to people like me who don't have $250,000 at the time, or who doesn't have a network of people who have at least $250,000.
Yeah, yeah, very, very interesting. And you know, these days too, I wonder because I've had several people on the show too who are wealth advisors who talk about getting out of certain companies because they're really not that involved in advising and moving things around anyway. It's pretty much an automated, pop you into a bucket and you just go down a road. So
It's technically a sales job.
yeah,
Yeah. I mean,
yeah.
their job is to go out and sell people and bring more money in, assets under management. So yeah, I can relate with those people's frustration once you really understand how the industry works, especially if you thought you were getting in it to really help people,
Hmm.
and sometimes you find out you're really not. You're just selling stuff. It could be a little disheartening.
Yeah, yeah, for sure. And so, obviously people get nervous. It's money. Money makes people nervous. And when they're, doing something that has a potential risk associated with it, what kind of risk tolerance do people have to start doing this? Or do they not need a risk tolerance that's very high?
Yeah, so they'll have to develop a risk tolerance at some point. But the beauty of this industry is like you don't have to have a lot of money. You don't have to have a high risk tolerance. And so people will be like, whoa, 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 whoa. What do you mean? First of all, if you were, if you follow me on any other platforms or come across my teaching, the first thing I say is that you can open a practice account and practice to make sure you even understand what you're doing first. And so I tell people first, obviously you want to get the education because if you don't have the education, then you don't know what you're practicing. And so then you don't know what you're doing. But once you get the education, it's not time to like go take your life savings or something and put it in the stock market. They have what's called virtual trading accounts or simulated accounts where you can actually practice buying the call, buying a put, picking your own stocks and see how well you are at reading those charts. Only then, and after, well, I like to say if you're right 7 out of 10 times, or you're net profitable, which means if out of 7 trades, 10 trades, 7 of them you're right, then you're ready. Or if because losing is part of the game too. You're not going to hit a home run every time. So you could also lose. Let's say you got a $3,000 account, $4,000 account. You could lose $100 7 times. You lose $700. But if time number 8, 9, 10, you make $1,000, then you made $3,000 and you lost 700. You're net positive $2,300. Then you're ready for real money, and that is the game. if you look at what I did, I didn't take that $10,000 student loan until I got really good at just flipping my $500. And I was like, I'm just doing the same thing with more money. And so I encourage people to get a practice account to practice. Number one. Number two, once they move over to real money, I can only speak from my experience. I built my lifestyle off my hourly and I was investing my commission check. So I knew off my hourly, I could still pay my bills. I could still have a car, eat, have a cell phone, et cetera, et cetera. And I was making like anywhere from $2,000 to $5,000 in commission sales every month. So I knew I had 2,000 to 5,000 that I could take a calculated risk to see if I can get rich off of. And if I lost it for some reason, I wouldn't be out in the cold. And so I think it's important for other people to understand that you have to figure out a way to build some margin in your life. One of the ways I did that early on was by moving back home. And I think this is where a lot of people get stuck, is because they look at their current life and they don't want to give up any piece of it. So they might make 100,000, they spend 100,000. And so they got zero room to take $1,000 or $2,000 calculated risk every single month. And if they do take a calculated risk and it doesn't work out, they go in the hole by $2,000. But if they sold their car or downgraded their car or downgraded their house or stopped eating out as much, they would have one to two, maybe $3,000 extra every single month to take a calculated risk with. And that's the position you want to be in with the stock market, because the stock market doesn't care that your rent is due, that your car note is due. It's going to do what it's going to do, and it's going to do it in its time frame. And so in the beginning stages, you can't rely on the stock market because your money doesn't come every 2 weeks like a paycheck. Like now I live year to year. I might make 100 grand, 200 grand, and like I'm set for the rest of the year or next year. But I can't tell you if that's going to come in month 1, month 2, month 3, or is it going to come $10,000 for the first 6 months and $50,000 in month? I don't know how it's going to come. And so you get to a point where you have to live year to year off this stuff. But in the beginning, you need to create room for margin with your job or the way your current living expenses are structured, so that you have some cushion that you can go take a calculated risk with every month after you're done practicing.
Yeah, that's great. And I don't know that people necessarily understand that unless somebody directly tells them, like you just did. I think there is a lot of kind of myth around, doing this full time means doing it as your job, and it doesn't have to be, it really shouldn't be that at the beginning, along with a lot of other, things that people want to do, whether it's side hustles that, you might need to have the job for quite a while you're doing whatever your side hustle or other business might be. So I think that message isn't, people don't hear that enough. It doesn't mean, that you're not putting the right mindset into it. Like, I think some people feel like, well, if I need the security of the other thing, I'm not going to be able to give 100% to the thing I really want. But you need that cushion. So.
Absolutely. Like, I think that's what's wrong with the hustle culture. People misinterpret people who have done great things and be like, yeah, like these great actors, they ate out of their car and they risked it all to be an actor. And it's like, no, not really. What they did was they chose not to buy a house. They wanted to keep their expenses low. And they did little side gigs while they went off and auditioned until they made their big break. And in life, like, you should have multiple streams of income. Like, even now, trading is not my only stream of income. We have the courses. I have the YouTube channel. I also have my real estate license. I don't use it as much, but I also have a networking company called Metro Detroit Networking, where we throw networking events around Metro Detroit. I'm working on the book. Like, you should have multiple streams of income. When you put 100% of your pressure on the stock market to make money, that is not a good day. And the majority of the world can't just stop working and say, I'm going to be a full-time trader. And so the reality is I feel like I was a better trader when I had a full-time job, because I knew I had something to fall back on, and it allowed me to take calculated risks or wait for the right opportunities. I didn't feel like I had to be forced to do something. When this is your only job and you're like, if I don't make a trade or an investment, I don't know how I'm going to eat next month, I don't know how I'm going to pay rent, you will start to do some investments that are either risky or not meeting your calculated risk profile. And you'll start doing stuff that could put you in a detrimental situation where you could lose everything because you're so focused on, I got to pay the bills next month. And so anything you could do to relieve the pressure, I encourage people to do, so that the stock market should be supplemental. It shouldn't be stressful. It shouldn't be something that keeps you up all night. It should be something that assists you in getting to your goals, not stresses you out to get into your goals.
That is such a great point. I could do a whole other show with you on that energy because, and I, unfortunately, I have no more time, and I could talk to you for so long. This went so fast, but what you just said was such gold. I think it's a great place to wrap up on, because that, I had a coach a while ago who would talk when I first started coaching about going into it with a striving energy. And just, so much need and almost desperation about making it work and getting the clients, and how negative that kind of energy is on whatever you're doing. And, you have this idea, well, if I put myself under so much pressure, I'll do better. But a lot of times it backfires. That is not there are those moments where a deadline or something might push you to finish something. But in general, having that kind of chronic striving energy going into something is not the formula. So I love that you brought that up. That was a great point. So relieving that is really important. Well, listen, Jason, I really could talk to you all day. I'm sad this is ending, but thank you for so much wisdom and so much just, the great ways that you have explained things. How can people connect with you, learn more, find you on all the platforms you're on?
Yeah, well, thanks again for having me, and I hope it's been super helpful to your community. The best way to connect with me is just at thebrownreport.com. From there, you can connect with me on LinkedIn, YouTube, Instagram, Facebook. Check out my podcast. Everything is right there at thebrownreport.com. And for people who are looking to get started in the stock market, we have what's called a stock market starter pack. So if you don't understand how to open an account, how to read charts, that's a free resource for you. And then we also have the stock option starter pack. If you're like, what are these call options? What are these put options? How can I use that to jumpstart my path to wealth and protect my account? We have that resource as well. Everything's at thebrownreport.com.
Okay. Thank you so much. I'm so excited that, the audience can find you and learn from you and me as well. So this is great. And keep doing what you're doing. It's a great service to the world, because you're right. There definitely isn't enough out there in the finance world for everybody, regardless of where you happen to stand at this moment financially. And that's what's needed to get you, if you want to be part of that crowd that the wealth advisors want to talk to. Maybe you don't want to be that person, but yeah. So again, thank you for being here. Thank you for doing what you do. And very much appreciate your time today.
Thank you. I appreciate being on the show.
Okay, great. And audience, thank you. Thank you for joining us on the Money and You Show. You can find us on all the podcast platforms, on the Limit Free Life YouTube channel, Roku, a few other places. I hope you love this show, and I hope you'll connect with Jason. This is an area that you want to learn more about. You can then decide if you want to engage, but you should at least be knowledgeable, because even if you hire other people to help you, you need to have a good understanding, and this is a great way to do that. So thanks for being here. We'll see you next week.